Pathways to private markets. Asset allocation in CFA Level 3 emphasizes the integration of capital market expectations, investor objectives, and real-world constraints into portfolio decisions. Candidates learn how macroeconomic trends, inflation, fiscal policy, and monetary policy influence expected returns across equities, fixed income, real estate, and alternative investments. The curriculum highlights strategic and tactical allocation approaches, risk budgeting, liability relative investing, and goals-based frameworks. Mean, variance optimization, Monte Carlo simulation, and scenario analysis are applied to evaluate allocation robustness under uncertainty. Investors must also consider taxes, liquidity, time horizon, and behavioral biases when determining optimal allocations that align with long-term financial goals and institutional or private client objectives. Portfolio construction in CFA Level 3 focuses on building diversified portfolios that align with client mandates, risk tolerance, and return objectives. Equity portfolio management examines benchmarking, shareholder engagement, and active versus passive strategies, while fixed income portfolio management addresses duration, liquidity, leverage, and liability-driven investing. Alternative investments are incorporated to improve diversification and enhance risk-adjusted returns within multi-asset portfolios. Candidates also study institutional and private wealth portfolio management, emphasizing investment policy statements, tax considerations, and life cycle planning. Trading costs, electronic markets, and execution efficiency are critical components because transaction management directly affects realized portfolio returns and overall implementation effectiveness in institutional investment environments. Performance measurement is essential in evaluating whether investment strategies achieve intended objectives and add value relative to benchmarks. CFA Level 3 emphasizes performance measurement, attribution, and appraisal techniques used to assess investment manager skill. Candidates learn holdings-based, returns-based, and transactions-based attribution methods for both equity and fixed income portfolios. Benchmark construction and benchmark quality are critical because improper benchmarks distort attribution analysis and manager evaluation. The curriculum also covers downside risk metrics, including Sortino ratio, maximum drawdown, and capture ratios. Global Investment Performance Standards, GIPS, are studied extensively to ensure transparent, ethical, and comparable reporting practices that improve investor confidence and strengthen industry professionalism worldwide. Derivatives and risk management within CFA Level 3 emphasize the strategic use of options, swaps, forwards, and futures to modify portfolio exposures and manage investment risks. Candidates analyze covered calls, protective puts, collars, spreads, and volatility strategies while evaluating payoff structures, break-even levels, and risk-return trade-offs. Currency management is also a major component, focusing on hedging strategies, foreign exchange risk, and tactical currency positioning. Swaps and futures are used to adjust duration, equity exposure, and asset allocation efficiently without liquidating underlying assets. The curriculum integrates derivatives into broader portfolio management decisions, emphasizing risk control, liquidity management, rebalancing efficiency, and the achievement of targeted investment outcomes. Ethical and professional standards form the foundation of the CFA program and are heavily emphasized at Level 3. Candidates must demonstrate the ability to interpret and apply the CFA Institute Code of Ethics and Standards of Professional Conduct in complex portfolio management scenarios. Topics include professionalism, market integrity, duties to clients and employers, conflicts of interest, and responsibilities as CFA charter holders or candidates. The curriculum stresses the importance of fiduciary duty, fair dealing, suitability, and full disclosure in maintaining investor trust. Candidates also study the Asset Manager Code, which promotes ethical governance, transparency, and accountability among investment management firms globally. The Private Markets Pathway introduces candidates to the structure, valuation, and strategic role of private investments within diversified portfolios. Topics include private equity, private debt, infrastructure, private real estate, and special situations investing. Candidates study performance metrics such as distributed to paid-in capital and total value to paid-in capital while analyzing differences between public and private markets. The curriculum emphasizes due diligence, business planning, valuation methodologies, and value creation strategies employed by general partners and investors. Private market investments are evaluated according to liquidity constraints, return potential, financing structures, and risk characteristics, highlighting their growing importance in institutional and high-net-worth portfolio construction. Overall, CFA Level 3 integrates advanced portfolio management theory with practical investment decision-making across traditional and alternative asset classes. The curriculum develops expertise in strategic asset allocation, portfolio implementation, manager evaluation, derivatives applications, and ethical fiduciary conduct. Candidates are expected to synthesize economic analysis, risk management, behavioral considerations, and investment governance into coherent recommendations tailored to institutional and private client needs. The inclusion of the private markets pathway reflects the growing significance of illiquid investments in modern portfolio management. By mastering these concepts, candidates strengthen their ability to construct resilient portfolios, evaluate investment opportunities critically, and uphold the highest standards of professionalism in global capital markets.